probably opens up the space for a lot of discussion on Reliance Communication as a stock. The stock shot up in early trade before just cooling off a little bit. Still, probably the only stock in the Sensex right now which is in the green, aside of maybe an oil marketing company. But talk about mid caps and small caps, and as promised, we get in one company in which Reliance Capital Asset Management has picked up a small stake. The company's numbers were not too bad. FY11 probably seems a good number for that, very good year for that one. Everest Industries is the one that we're talking about. The stock 4.5% down. Not a surprise considering the market mood right now, but how does the future look like? ML Gupta, MD of the company, joins us on the show to talk about all that and more. Mr. Gupta, many thanks for joining in. I was looking at some reports that have come out on your company, the fact that you've entered into the pre-engineered steel building business, and a lot of analysts are saying that that is going to be the next big kicker for you as a company. True?
Yeah, it's very right. Actually, this business, because it has very large scope for expansion, so we feel that this is going to be engine of growth for our company. And we already have, as you know, one plant operating in Uttarakhand, and we have planned that as soon as we reach about 90% capacity utilization of this plant, which we hope to do in this financial year, then we will putting up of the new plant, maybe in Western India or South India. So that's what our plan is, and then thereafter it will continue to multiply, and in due course of time it may take over our traditional business of cement manufacturing units, that is cement product manufacturing units.
How would the margins pan out in this business, Mr. Gupta? Would that be higher than the traditional business that you had, and as a result of that, would the bottom line growth be higher than the top line growth in FY11?
Yeah, actually we have a margin productivity on this steel business of about 10%, and we are in a area where we have tax rebate and also excise rebate. So in fact that also helps us further. So whatever we get on as a PBT is also become our PAT. So 10% is what we are expecting on the traditional business. Also the growth and the margins are around the same, but we feel that the way infrastructure is growing in the country and people are going more and more for PB structures, I think this business will certainly overtake the traditional business of cement roofing sheets and the other items which we make. But there also in cement items also we have cement boards which is doing very well, and the export market of that item also is growing. So we look at that particular segment also as a growth segment. But I think PB ultimately, because of the high volumes and the way infrastructure is being indicated to grow in the country, I think this business ultimately will be the major business.
Just before I get to some numbers, Mr. Gupta, one point I just wanted to make. On Thursday, there is a small stake that has been bought by one of the fund houses in your company. Are you in talks for any kind of a preferential allotment to raise funds of any sort with any fund house or a private equity investor?
Not at all. In fact, whichever fund houses have taken shares, it is at their own understanding of how the company is doing, and we have in fact not sold the shares to them directly. They have picked up from the market,
but
and we are not in talk with anybody.
I understand that, Mr. Gupta, but there is no chance of...
We are not in talk with any company or any mutual fund to give our shares on priority to them.
Fair call. One word then on the revenue growth in FY11. People have gone, there are various figures, but some people have said that, or some analysts have said that the growth, revenue growth in FY11 could be as high as 30-35%, and the bottom line growth could be as high as 50% in the next year. You think it's a fair assessment? You will clock in 50% growth? Yeah,
I think it's a good assessment, because we had created some new capacities in the year 2008-9, and with our productivity improvement continuously, and still business coming in its full form in this particular year, where we are expecting a turnover of 200 crore from steel business itself, And with international trading business, which we have started recently, I think we are expecting 1,000 crores turnover of the company from current 654 crore. So, which is what numbers you are giving appears to be quite in line with our thinking. And similarly, with our productivity improvement initiatives and our all cost cutting measures, cement prices going little down, steel prices are also on lower side. I think the raw material cost may be lower.
Right.
And all with all that, we hope that our profits will definitely.
Mr. Gupta, I'm sorry for butting in, but one quick answer, very quick answer from you. Would you do a profit after tax of 50 crores or above in FY11?
Hopefully, that's what we are targeting to do more than that.
Great, Mr. Gupta. We wish you all the best for that. Many thanks for joining us on ETNow and explaining that, and all the best for FY11. That's Everest Industries. They are not in talk with any fund houses. Any action that has been taken either by Reliance Capital or by other funds are their own discretion, but the management sounds fairly upbeat about a 50% or northwards growth in profit after tax for FY11. That's not too bad. All right, take a quick break, but on Market Sense with Andy Mukherjee, Jim Rogers of Rogers Holdings joins us from Singapore to talk about his insights on Europe, commodities and a lot more. You can't afford to miss that. Of course, take a break and come back, talk about a couple of other corporates, one with a European exposure and one which has won a very big order in trade today. All of that coming up. Stay tuned.